Okay, hello everybody. Today we're going to demo Split. Split is a payment rewards platform. It's designed to bring down a business's payment processing fees.
So the problem that Split is trying to solve is that card processing fees are killing small businesses. Brick and mortar retail stores lose over 3.5% of their revenue to card processing fees, and that's thousands of dollars per month just to accept payments.
So we built a solution. The solution is actually very, very simple. We allow a business to accept in-person ACH payments with the same sort of ease and convenience that a customer would expect when paying with Apple Pay or with a card. The infrastructure is pretty simple. It's an app, a customer-facing app, and a business-facing app, and then we have a NFC payment reader that we've made with epoxy and an NFC tag. This costs less than $1. And
So that's us.
this is us. This is Mauricio. My name is Taylor. We're really excited to be here, and now we're going to give you a quick demo of our product. This is going to be a screen recording. This is the customer-facing app, and this will be really fast. So you can see, you tap on the icon. This is going to be your home screen. If you can pause it. So we've already loaded a bank account. That's where the card is created. At the top, you see a token balance. We have a reward system built into this to give users a reason to want to use this versus their credit card, which also gives them rewards. And then if you tap on that card, and you can keep playing it, if you tap on this card, you'll see this pops up. This is where you would enter in your bank account. You just sign in to the way you would in your banking app. And almost every bank is supported in this. This is through Stripe. This is the reward screen. This is where you'll see your token balance at the top. And then this gives you the breakdown of how the rewards work. You can pause it again. It's really simple. Every dollar you spend, you get a token. Every business creates rewards, and then they just take that price, they times it by 10. So your tokens come out to about a 10-cent value, which is 10%. The businesses can do this because they set limits on how many rewards they give away each month, so they know their liability up front, even though it's that 10% thing. And then you can go again. And then you're going to see, so if you can pause it again. This is a business, and these are the rewards that the business created and listed. That's the cost of the tokens. And then if you click on one of the rewards, you go to this screen where you would redeem it. And if you had enough tokens at the bottom there, you could push that button, and you would tap this NFC reader, and it would process your reward. And then I think lastly, we're going to go to transactions, which basically just shows you it's a record of all the transactions you made in the app. And then we email you a copy of this. We actually email it twice because I don't know if you guys know about ACH, but it's a delay. So we email it to you when you make the payment, and it gives you all the information. And then we email it to you when the payment has completed several days later. So now that's pretty much how the customer-facing app works. So now we're just going to run a payment. We're going to show you how fast it is. I wanted to do this in person so you could see us tap the NFC device, but if you can go back to the beginning. So this is the home screen. To make a payment, we've already have our bank account loaded. You're going to slide that arrow where it says slide to make a payment. And now there's a biometric ID or a passcode. And then this pops up. And then this is the point at which you would tap the NFC reader. You can pause it. And so this screen, the business will tell the user how much they owe them, and then the user will type that in. We've gone back and forth with this. We had different variations, and one variation the business entered it, but there's too much. It's too slow for the business to have to enter it in. So we're trying it now where the user does it, and we're going to see the rate at which users don't do this very well to make a final decision. And then after you enter the amount, you have the opportunity to enter a tip. And you hit that pay button. If you have enough money in your bank account, the payment will start and it'll be processed. You'll get a confirmation screen, and then in the business app, it shows up with your name and the amount that you paid, and that's it. It's meant to be just like Apple Pay. We're trying to make it as close to that as we can. That's it. Thank you, everybody.
Thanks, guys. Fantastic.
Appreciate it.
Thank you so much. All right, next we have Scrypted.ai.
Let's pull it up.
There you go. You want to do
Nice.
stand at the podium?
I think I'm going to stand here, guys, and just talk to you. So, okay, great. Hey, I'm Tim Cotton. I am the co-founder, technical founder of Scrypted, and we are building something new. We are building a platform for doing micro-lending to AI agents. And we've essentially invented a new AI native yield asset that I would like to talk with all of you wonderful regulators about because it's brand new. We are backed by Andreessen Horowitz's CSX and Palm Tree crew. We started this journey last year in October, kind of in London at their big accelerator. We had an amazing time working with their primary research group. So what I'm going to tell you about, I'm going to try to load your context windows in your heads a little bit here. Thank you for, someone laughed about that. Thank you. When you think about AI agents, right now, what you're hearing in news articles, what you're hearing like on shows and stuff is very skeuomorphic, very human-centric, very, let's make a customer service agent. Let's make a travel agent that books your hotels for you, right? And I want you to open yourself up to this idea that there are non-human equivalent valuable AIs. And I want you to think not of AIs as giant human level thinking. I want you to go back maybe a decade, think about like smaller micro AIs, and I want you to think about them as what happens when we give them the superpowers of today's deep learning. Well, what you can do is you can solve the boardroom problem. And this is why I love what Connor Sibley was talking about. We already, thanks to vibe coding and other platforms, are able to compress a software development lifecycle or product development from 9 weeks to 9 days. That's a phenomenal return on investment for anyone, right? What I want to give you is the ability to autonomously compress that to 9 hours and eventually 9 minutes. What I want to give you is a platform where any business or developer or an intelligent enough AI agent can register a microservice. Instead of trying to solve the biggest problems, solve tiny problems. Decentralize Amazon Web Services, for instance. Turn every single facet of computation into something valuable. Not as granularly as Ethereum with doing it by opcodes, but do it by business logic. Take all those lovely margin improvement initiatives that you all have at your boardroom level and say, how do we arbitrage this? How do we turn this into something valuable? So what we're going to do is I'm going to tell you about 3 primitives that we've invented for this network. The first one is microservices. I've said the word multiple times. What I mean is I want you to think of something like text to video. Right now you can go to Sora 2, you can generate a beautiful video, and how does it work under the hood? Well, it's not just one model, it's not just one AI, it's an entire workflow of different services that are working together to understand your intent, to plan out the scenes, to fetch the audio. Well, all of us can do that. And I've built you a network so that you can actually make money off of it. For instance, you could build a slightly better microservice and attach it to the audio generator part, right? But instead of me managing everything, I simply attach a micro ledger to every one of those microservices, a P&L for every component. And instead of me having one massive AI agent that tries to watch this entire network, which will not work, I just attach each of them a little tiny micro agent. Its only job is to like watch the P&L, look at the code, and spend a little bit of compute saying, what could I do better? Now, what's really fun about this is that once you register a service like that, it's just a bunch of code, you could watch its P&L, or it's just watching its P&L. And it says, I have an opportunity in front of me. I want to execute on it. Cool. There is a new standard in Ethereum as of this week. This is the opportunity capture. This is the velocity called the Trustless Agent Registry. We can now upload all of that data and we can depend on it. Then once the performance analysis is done, the agent just said, hey, I don't actually have an eval benchmark, so I can't improve myself. No problem. The agent is allowed to take out a microloan. We call it a margin improvement note. It's a note based on its expected future profits on the margin that it's going to improve. We tokenize it. We turn it into an actual Solidity contract, and it's out there on the base network. I would like to thank Sebastian at Signature Ventures for being the first microloaner for that. And then performance bidding. We partnered with Mayur at Vistara Labs. He actually created an agent that created the benchmarking for us, got paid by the microloan, and boom, suddenly I think it took less than an hour, this agent was able to improve its own service. And as you know, these are tokenized assets, these new MINs. That means that you can trade them. You could bundle them. I'm Tim at Scrypted. Please ask me questions after.
Thank you so much, Tim. Appreciate it. That's great. Thank you so much, Tim. All right, we have Smartfunds. Coming down. There we go. All right, take it away.
All right, I'm JJ. I'm one of the founders of Smartfunds. We're building the institutional tokenization platform to bring U.S. private markets on chain. So if you haven't heard yet about tokenization or understand why it's important, you will soon. And so it turns out that actually putting securities, particularly private securities, on a blockchain is a really complicated problem. And we've solved it in a very interesting and unique way, which is we've built a natively tokenized SPV as the base layer of our tokenization platform. Above the SPV, we are an SEC registered transfer agent. We have access to broker-dealer and ATS licenses through a partner, which is what gives us our full stack approach, which means that we can issue private securities on a blockchain and also allow them to trade on a blockchain in a permissioned securities compliant environment. So what we're launching actually tomorrow on Product Hunt is our roll-up and syndicates SPV product. And we'll give you a quick demo of that right now just so you can see what that looks like. So anyway, this is a demo of our SPV product. This is called Super Hot Round. It's a 500K deal, 42.5K already closed. No additional commitments. It's currently open to capital. On the right, you can see the capital contribution history chart. As you scroll down, everything you'd expect to see in an SPV, you have your data room for your diligence. You can see this deal is being run by Babe Ruth. It's a 0 and 10 fee structure. You can see on the cap table, there's currently 3 people, and we're going to add a 4th as part of this demo so you can see what the onboarding process looks like. So here on contributions, these are closed investments, and the important thing here is this column in the middle that says transfer method. And what you see is that some people are closing using USDC, and others are closing using traditional banking, so you don't need any crypto knowledge or infrastructure in order to use this. The transaction is tokenized either way. So we're going to go ahead and invite an investor now. And again, everything you'd need to be able to run an angel syndicate or a seed stage product. You can give minimum and maximum investment amounts. Do they get any shared carry if they're part of your network? And then you just click send invite. And boom, now we see that there's a 4th investor invited. We know that this is Mick Jagger because Mick Jagger is already a KYC'd investor. We know that Mick Jagger is an accredited investor because he already has that credential, but it says that he hasn't signed his documents yet. Obviously, we just invited him. So let's go over to his email. This is Mick Jagger's email. And you can see that there's an email that arrived 0 minutes ago. Babe Ruth has invited you to invest in this deal. So he clicks on view deal. And so you can see the deal dashboard. And again, it confirms that he's an invited investor. That's for compliance with 506B marketing rules. So he does his diligence. He says, okay, I want to invest in this deal. So he clicks accept invite. It then confirms that you're KYC'd and accredited. I obviously invited an account that already had those credentials. And then we click next. It now spins up your deal documents in real time. We use electronic signatures for compliance. So we're going to go ahead and sign with the name we KYC'd with, which is Mick Jagger. And we're going to go ahead and click Sign Documents. So those documents will show up in your Investor Reporting tab, but let's go ahead and download them here so we can just confirm what we just signed. So we go ahead and download them and open them up. And so the first thing you're going to see is the metadata required for compliance with electronic signatures. So you can see that this is for Super Hot Round, and the signer is Mick Jagger, and you have a date and an email address and IP address. So this is fully compliant as an electronic signature. And now if we search elsewhere in the documents that we just signed for the next place that we might find Mick Jagger's name, the next place is the signature on the subscription agreement. So as part of this process, you've signed up to all the requisite offering documents for a compliant Reg D offering. And now we click next and go to the closing process. And again, in this, you have the option to use stable coins or traditional banking for those people who are not comfortable with stable coins yet, but we're going to go ahead and close using stable coins because it's always easier. And we're going to go ahead and invest $15,000 into this deal because that's a unique number on the cap table. That'll be our 4th entry. We go ahead and execute the transaction. It says capital has now been sent. Boom, it now changes. It knows that Mick Jagger's documents are signed. And as we go down to the contributions tab, you'll see a 4th entry show up and it says pending. And now it says completed. So we'll go ahead and click through. So everything you've seen so far looks like regular old fintech until now, because now we're clicking through to the tokenized transaction receipt. And you can actually see this is the tokenized cap table, where there's now a fourth person on the cap table with 15,000 shares. And so what this is, these are not cryptocurrencies. These are compliant Reg D securities that are natively on the blockchain. From there, we'll be launching our tightly integrated on-chain secondary private equity exchange coming after that. So anyone in the private markets, whether you're an investor, whether you have late-stage holdings that want access to liquidity, we have a whole bunch of different transaction types. Please come up and ask questions. I'm happy to tell you more about it.
Guys, how are you? Awesome. I heard folks talking about SSBCI. How many of you know what SSBCI is? One person. State Small Business Credit Initiative, part of the Department of Treasury. Back in 2010, they created the Small Business Jobs Act that allocated funds to every state and territory. As Kevin is doing that, I know. So anyhow, long story short, I was part of that team. I was one of the portfolio managers, 24 states, territories, 2011 through 2017, program sunset in 2017, and I happened to take a chance on myself, understanding there was friction within the ecosystem. Ecosystem, I'm referring to public. We all know governments can be very inefficient, right? We also know that private industry is always trying to identify that next win, especially if you're a VC, right? And then the small business or the founder. My goodness, I am one. So I can tell you I've been on both sides, and it's extremely fun at times, but it can also be extremely challenging. So in 2020, we convened my former portfolio of economic development practitioners, and we started talking about what can we do in light of COVID to support small businesses and founders. And what came out of it was Dave and team go out there and design a flexible fintech platform that can fill the gap where public and private isn't currently participating. What you're seeing is the capital access application tool, and this is going to be a demo specifically targeting SSBCI portfolios. So what you are seeing here is the dashboard for the Economic Development Portal. Our platform has 4 portals, including public, which could be state or private, or state or federal. We also have private, which includes financial institutions, CDFIs, MDIs, credit unions, and then on the equity side, venture capital, and then of course the small business. So the platform integrates seamlessly, leveraging AI and blockchain. So what I'm going to show you here is the Economic Development Portal that a state would actually use. So here you can see, we'll go to State Small Business Credit Initiative. We can scroll down. This makes the state smarter. You can see everything that's in their portfolio, from credit programs, business demographics, transactions, equity programs, if they actually have them. Going over to reporting, we're going to go directly to Treasury. We're going to go to SSBCI. So here, you can see we have already pre-populated the Treasury reporting quarterly report that shows obligated funds. It also shows committed funds as well. We can also go here to the annual report. Treasury requires every participating jurisdiction to submit reports quarterly and also annually as well. Moving on, we can go to transactions. We can select SSBCI. Here we can see specific transactions, 90 days, 12 months, 30 days. SETI. And SSBCI 2.0, every state must have a SETI target and meet that SETI target so that they can draw down all of their funds. Our CAT tool has the ability to actually identify if a participating jurisdiction is meeting that target. Moving over to performance. Here, we have program performance for all programs and platforms. So here you can see the money received was 128 million, and we are able to track if it's been funded, unfunded, et cetera. I'm going to move us over to applications. Here, the Economic Development Office can actually identify where a transaction is in real time. And go to details. You can see everything, all the loan information. That should actually work. Documents, OCR, compliance based on Treasury's regs and rules, the status, the blockchain. Finally, I'm going to go to funds. You can see our VCs. And systems. So here, you can see we have the ability to add payment options. Also, every state receives 3 tranches, so our platform allows you to actually track every single tranche. And here we go. You can actually see how each portfolio and program is allocated. And so thank you very much. If you have any questions, please see me. I'm happy to announce on November 1st, we will be deploying our platform to the 4th largest economy in this nation. Have a great day, guys.
Amazing.
Thank you.
Thank you so much, Blair.